Have you ever wondered how the commercial real estate market is shaping up globally? Well, it's an exciting time for commercial real estate, as vacancy rates are hitting all-time lows in many major cities across the globe. Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In a recent report by NDTV Profit News, Amit Ramani, chairperson of Office Space Solutions, highlighted the robust demand for commercial real estate in India. According to Ramani, vacancy rates in India's major cities are at their lowest, indicating a thriving market with plenty of room for growth. This growth is fueled by urbanization, the influx of global capability centers, and multinational companies setting up IT outsourcing and local operations in India. Ramani emphasized that India remains one of the least commercialized markets globally, which presents significant growth opportunities. The past year has been particularly strong for office, with gross leasing of almost 80 million square feet, and a notable 20% of that in the flexible workspace segment. Cities like Mumbai have seen a 120 basis point reduction in vacancy rates year on year, now down to about 12.5%. The first quarter of the year has shown strong performance, with nearly 60% of deals involving leases over 100,000 square feet. Rental prices have risen by 7.5%, reaching 105 rupees per square foot, showcasing a long-term commitment to the Indian market. The return to office mandates have been a significant driver in this resurgence, especially among large IT and IT-enabled services companies that had downsized during the pandemic. Bengaluru continues to be a key growth engine for office, given its status as India's tech capital. Interestingly, Ramani pointed out that 30 to 40% of real estate was relinquished by large IT and ITES companies over the last 4 years, only to see these companies now reclaiming space due to insufficient capacity. Addressing concerns about the impact of artificial intelligence on demand for global capability centers, Ramani asserted that AI is more of a growth driver than a threat. While acknowledging some short-term uncertainties related to global trade tensions and tariff risks, he noted that these have not led to any pullbacks or hesitation on the ground. Companies continue to expand, reflecting a positive outlook for the commercial real estate market. The U.S. multifamily sector saw a strong start in the first quarter of 2025, with nearly 102,000 units absorbed, marking a 12% increase over the same period in 2024. According to Cushman & Wakefield's Market Beat report. This surge in demand is notable, as it surpasses the pre-pandemic average of 73,000 net move-ins. The sector continues to thrive on steady household formation and the challenges of affordability in the for-sale market. Interestingly, demand has outpaced supply for the first time since 2021, with new deliveries totaling 95,000 units. A 25% decrease compared to the first quarter of 2024. This drop in supply is expected to continue, given that the construction pipeline is now 34% lower than a year ago, returning to 2018 levels. Despite economic uncertainties, rent growth remains positive, with a 2% year-over-year increase in the first quarter of 2025, staying within the historical average range of 3 to 3.5%. The report highlights that if the economy holds, the outlook for rent growth remains favorable. The South has shown the strongest demand, driven by significant population growth, with Dallas/FT, Worth and Phoenix leading absorption figures. Sarasota and Huntsville also exhibited strong demand, absorbing more than 2% of their inventory in the first quarter. The shrinking construction pipeline has been a relief for investors, especially as the market faced the largest wave of deliveries since the 1970s. New deliveries have decreased by 20% for 2 consecutive quarters, now at the lowest level since late 2022. Nationally, 545,000 units remain under construction, the lowest since 2018. With construction starts down 36% year over year, the pipeline is unlikely to replenish soon, allowing room for recovery in fundamentals, assuming demand growth remains positive. Texas has led the nation in this construction pullback, with Dallas/FT, Worth, Austin, and Houston seeing significant declines in their pipelines over the past year. Rent growth has shown mild improvement since the third quarter of 2023, where it bottomed out below 1.5%. Since then, each quarter has seen some improvement, with the market now posting a 2.02% year-over-year growth. However, competition for renters remains fierce, with vacancy rates still above historical averages. The widespread use of concessions suppresses effective rent growth, with effective rents increasing by just over 1%, approximately half the growth seen in asking rents. The Northeast and Midwest outpace other regions in asking rent growth, with Northeast Arkansas and San Jose standing out with notable increases. Christine Mastandrea, President and Chief Operating Officer of Whitestone Real Estate Investment Trust, discusses how a community-first mindset can drive long-term value in commercial real estate. Whitestone's strategy involves tailoring retail environments to fit local culture and leveraging psychographics and generational shifts. Christine explains how shopping centers can become vibrant hubs for community interaction, essentially serving as the living rooms of their neighborhoods. Flexible, experience-driven developments are highlighted as key to thriving in today's ever-evolving retail landscape. The conversation with Christine Mastandrea reveals that by incorporating elements that resonate with the local community, retail spaces can enhance their relevance and resilience. Whitestone Real Estate Investment Trust emphasizes the importance of creating environments that cater to the needs and preferences of the community, thus ensuring sustained engagement and patronage. As Christine Mastandrea points out, acknowledging and adapting to generational shifts and psychographics is crucial. This approach not only attracts a diverse demographic, but also fosters a sense of belonging among community members. By focusing on these aspects, retail developments can achieve long-term success and contribute positively to the community's fabric. The discussion also touches on the significance of building resilience into retail property investments. Christine suggests that the ability to adapt to changing consumer behaviors and economic conditions is essential for maintaining the vitality of retail spaces. This adaptability ensures that retail environments remain relevant and appealing to consumers over time. Christine Mastandrea's insights provide a valuable perspective on how retail real estate can succeed by becoming integral parts of their communities. By positioning retail spaces as community anchors, they can drive both economic and social value, ultimately enhancing the overall appeal and utility of commercial real estate developments. Geode Capital Management LLC has recently reduced its holdings in Apollo Commercial Real Estate Finance, Incorporated, by 2.6% during the fourth quarter, as stated in its latest filing with the Securities and Exchange Commission. The firm owned 3,095,323 shares of the Real Estate Investment Trust's stock, after selling 83,352 shares during this period. By the end of the most recent reporting period, Geode Capital Management LLC held about 2.24% of Apollo Commercial Real Estate Finance, valued at $26,812,000. Several other institutional investors have also recently adjusted their positions in Apollo Commercial Real Estate Finance. Notably, Smartleaf Asset Management LLC increased its holdings by 327.1% during the fourth quarter. They now own 3,045 shares valued at $27,000 after purchasing an additional 2,332 shares. Murphy & Mullock Capital Management Corporation acquired a new stake valued at $67,000, while Exponents Incorporated bought a stake worth $87,000. SG, America's Securities, LLC, and CIBC, Asset Management Incorporated, also acquired new positions worth $93,000 and $112,000, respectively. Institutional investors now own 54.43% of the company's stock. On the trading front, Apollo Commercial Real Estate Finance's stock opened at $8.34 on the previous Friday. The company holds a market capitalization of $1.16 billion, with a price-to-earnings ratio of negative 8.77 and a beta of 1.41. The company's debt-to-equity ratio is 0.67, with both current and quick ratios standing at 51.19. Over the past year, the stock has seen a low of $7.70 and a high of $11.20. The business features a 50-day simple moving average of $9.52 and a 200-day simple moving average of $9.16. Apollo Commercial. Real Estate Finance last posted its earnings results on Monday, February 10th, reporting earnings per share of 30 cents for the quarter. This figure surpassed the consensus estimate of 23 cents by 7 cents. Despite a negative net margin of 39.40%, the company showed a positive return on equity of 9.37%. Research analysts are projecting that Apollo Commercial Real Estate Finance will post 0.63 earnings per share for the current fiscal year. The company has also announced a quarterly dividend, which was paid on Tuesday, April 15th. Stockholders of record as of Monday, March 31st, received a dividend of 25 cents per share. This represents a $1 dividend on an annualized basis, yielding 12.00%. Apollo Commercial Real Estate Finance's dividend payout ratio is currently negative 105.26%. Insider activities at Apollo Commercial Real Estate Finance include Director Carmencita N.M. Wander selling 11,000 shares on Tuesday, March 4th at an average price of $9.96, totaling $109,560. Following this transaction, the director now owns 9,624 shares, valued at approximately $95,855. This trade marks a 53.34% decrease in their position. Additionally, Chief Executive Officer Stuart Rothstein sold 52,074 shares on Monday, March 17th, at an average price of $9.99, totaling $520,219.26. After the transaction, the CEO owns 385,928 shares valued at $3,855,420.72, representing an 11.89% decrease in their position. Analyst ratings for Apollo Commercial Real Estate Finance have seen changes, with StockNews.com upgrading the company from a hold rating to a buy rating. In contrast, J.P. Morgan Chase & Company reduced their target price from $9.50 to $8, maintaining a neutral rating. UBS Group also lowered their price target from $10 to $9, keeping a neutral rating. On a more positive note, Keefe, Bruyette & Woods upgraded the company from market perform to outperform, setting a $10 price objective. The consensus rating for the stock remains hold, with an average target price of $9. Apollo Commercial Real Estate Finance, Incorporated operates as a real estate investment trust that originates, acquires, invests in, and manages commercial first mortgage loans, subordinate financings, and other commercial real estate-related debt investments across the United States, the United Kingdom, and Europe. With a focus on providing financing solutions, the company plays a significant role in the commercial real estate finance sector. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.